Okay. That's it from my side. Thank you.
Thank you, Sanjay.
Thank you so much, Mr. Singh. The next question is from Mr. Vivek Maheshwari from CLSA. The line has been unmuted. You can go ahead and ask your question.
Hi. One more question on personal care margins. The 215 basis point decline of that, would it be possible to quantify royalty impact? Because my sense is royalty will have a disproportionately higher, salience in case of personal care. Is that a fair assumption?
Not really. I talked about, royalty being about 30 to 35 basis points overall impact for the quarter. And it would not be dramatically dissimilar for personal products. So the biggest driver clearly is the step up in spend in A&P. And then, of course, you have got, a raft of other factors.
Okay. The reason I ask this is because in case of soaps and detergent, there will be the salience of Hindustan Unilever brands will be much higher than compared to, what it would be for personal care. Is that a fair assumption?
Well, that is possible. All I'm just saying is if you look at the 215 basis points that you're trying to quantify, Vivek, and try to get the priority of driver, the biggest driver by far, more than half, is A&P.
Okay, understood. The second one is the royalty would be hitting other expenses, right? In the main P&L?
That is correct.
So, other expenses as a proportion of revenues are down, say, 60 basis point. If I adjust this 30-35 basis point, there is a 95 basis point saving in other expenses. Could you indicate broadly which heads would have seen, such kind of saving?
So we are, there are a variety of things that go into other expenses. For example, our entire area of distribution costs, logistics costs, distribution costs, they are entirely part of advertising, of other expenses. When you look at all of the overhead costs of, running the establishment other than people are all in other expenses. Royalty, as you pointed out, in other expenses. And as we've said, our task and our focus is really to make sure we manage our costs very, very tightly. One part is on the supply chain, and the other part is on all the other costs, whether it is marketing spends, whether it is overhead, whether it's distribution costs. So it will be across the board, and this is not necessarily a new phenomena. One of the things that we talked about earlier is our approach in managing costs is a holistic end-to-end approach. So across the whole value chain, whether it is on cost to do with materials, whether it's on cost to do with conversion, whether it is on cost to do with our marketing spend, or indeed cost to do with overhead. So across the whole value chain, we try and manage our costs tightly and keep generating new savings ideas and programs.
Okay. And finally, on financial other income, the 50% increase you talked about dividends. So is this coming in from the unit that the export business that you had hived off?
That is correct.
That is correct. Okay. And sorry, finally, one last bit. The impact of transporter-led stocking is 50 basis points. Is that correct?
Well, actually, if you see the UTG that we've talked about in the chart is rounded off at 6%. The real number is closer to 6.3 or so.
Okay.
Yeah? So that's sort of, if you take the 1 decimal point number, and I think 6 of it is around 5.5%.
5.5%. So you're saying 80 basis points roughly the impact is?
Yeah, 6.3 minus 5.5 is 80 basis. That's correct.
All right. Thank you very much and all the best.
Thank you.
Thank you, Mr. Maheshwari. Before we move on to further questions, I would like to repeat once again to all the attendees, if you wish to ask any question, kindly press 0 and 1 on your telephone keypad and wait for your name to be announced. It's 0 and 1 to ask questions. The next question is from Mr. Rahul Thakur from ICICI Bank. The line has been unmuted. You can go ahead and ask your question, Mr. Thakur.
Hello. Sir, I would just want to ask one question. If we look at the segmental capital employed, then we see a significant increase in the soaps and detergent segment. Is there any particular reason for that, or is it just seasonality or something?
So if you look at variety of things, there is one of the things certainly there is an impact on seasonality. The second is that when you look at capital employed, there is also an element of both the capital expenditure that we are putting in, plus any strategic stocking from time to time, which we do, which is different from time to time. So there is no, I think the way to look at, I would say, the capital employed is really to look at it on an annual basis. when we publish the balance sheet, you will see, and we gave you a little bit of flavor in our cash flow statement, that overall working capital has continued to show good improvement, and it's been primarily led by a further improvement in our stock days on hand.
Okay. Okay. That helps. Thanks a lot.
Thank you so much, Mr. Thakur. The next question is from Mr. Jamshed from Citigroup. The line has been unmuted. You can go ahead and ask your questions, please.
Yes, thank you for the opportunity. So my question pertains basically to some consumer insight on Fair and Lovely, if you all could provide it. FAL has been struggling for 3 quarters or so now, and my understanding about the product is that it has to be applied fairly regularly in order to maintain the lightning impact or the lightning effect. So are we saying that, current consumers have actually started using the product less and less, or are you saying that new consumer acquisition has come off dramatically over the last 3 quarters?
I think I wish I could give you a simple answer, but you can be sure that a lot of thinking and a lot of data crunching is going on within the business. The reality is it is a bit of both. There is some consumption which is coming off as people are trying in the early days to extend the what was they were buying a tube for 7 rupees, the big nose sachet. Now they're buying it for 8 rupees and therefore wanting to stretch it a little longer. That's part of it. And the second part is the net impact in terms of addition, because some people continue to move up to other brands. There are new people coming in. That balance has been a little lower in the last 2 or 3 quarters than it was in the earlier period. So it is a combination of these two which are here. Our earlier experience shows that whenever you take a price increase, there is the period of adjustment which takes place. But consumer mind are such that over a period of time you get adjusted to the new reality of an 8 rupee price point and habits get back to what they were, but it takes time. We hope we are closer to the end of that period rather than the beginning. But it's not abnormal. It is taking time, and we'd like it to get over soon.
Is there any thought that the consumption has come off because the efficacy of the product has improved? Have the active ingredients, for instance, something like niacinamide or something, been increased?
No, I think I'd like to believe that the product has become much better, but the result of that should not be people using less, but more people wanting to use more. But no, there is no such understanding.
Okay, fair enough. Second and quick, this is a housekeeping question. What is your total reach today, direct and indirect?
We don't. We shared the picture a year ago, and we do not want to talk about what our reach is. We talked about adding 1 million outlets over the couple of years, getting to a range of about 2 million outlets, and that's really all that we would want to talk about.
Okay, thank you.
Thank you.
Thank you so much, Mr. Jamshed. So at this time, there are no more questions in audio. So I will hand it over back to the management if there are any questions over the web.
Sure. Thanks, Hardeep. Yes, indeed. We do have a couple of questions on the web. So there's one from Nikhil Vora that's coming in who says, "Hi, Nitin. 3 questions. 1, water, has it now become relevant to call for a separate profit and loss statement? Meaning, is there adequate scale of profits that is now measurable? The second question is on Tresemme. Just your sense, is the cost of entry or a later entry now cost us a lot more, or it's not changing too much? And the third, internal management responsiveness to change. Believe you are relearning the digital world. Can you throw more light on actual changeovers within the top management?"
But let me just take the last one in terms of our overall responsiveness to change. There are many things that we need to do, both structural in terms of our processes and ways of working, and in terms of building capability. We talked a couple of years ago how we systematically looked at our business to see what proportion of our business had the capacity to make changes to pricing, to pack sizes, etc., to respond to the changes which the marketplace might require. We made very good progress on that. But it's not just about making hardware changes and technology changes in the factory. It has to be about finding a way to reduce decision-making time and execution time. And therefore, we have in place internal processes which get cross-functional teams to meet every Monday, to assess the situation in terms of cost, competitive action, and determining our response. So essentially, our planning cycles as well as our execution cycles are getting tighter. We've made a lot of progress, but again, this is an area where we would like to continue making progress. We're also wanting to reduce the amount of finished goods that we have in our business, because you can do all of this, but if your finished goods which you carry are significant, it just delays the action that you would be willing to take. So apart from releasing cash in the business as we reduce inventory, it also improves the agility and responsiveness for business. As far as the first and second point,
I think as far as water is concerned, no, it's still well below the thresholds, that are required for calling it out as a separate segment, and therefore at this point of time, that's not relevant. I think as far as TRESemmé is concerned, I'm not sure what you mean by, the cost of entry or a later entry now costs us a lot more, etc. I think we look at it as a strategic addition to our portfolio, where we had a great brand that had come newly into the Unilever stable with a very differentiated offering of giving a salon-like experience to consumers, and therefore we felt it the right time for us to bring it into the Indian market and strengthen our portfolio.
And indeed, I think the timing was right. I think the performance in modern trade that has been around for a while has been very, very good. Like you heard us say earlier, in the conditioner space, although he's got the leadership position, strong presence in conditioners, building a strong presence already in shampoos. So it was clearly a brand and a proposition which was right for the market at this point in time.
All right, I think with that, we'd like to now bring the call to a close. Just before that, as you know, an audio-visual replay of this event will be available on the Investor Relations website, and you can always go back and refer to it. With that, I'd like to bring the call to a close. Thank you, everyone, for your participation, and have a great evening. Bye.
Thank you so much, sir. With this, we conclude the conference for today. Wish you all a great evening ahead. You all can disconnect your line. Thank you so much.